Welcome to Las Vegas Real Estate Now, where we believe in the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld of the Brown Blankfeld Group, selling homes in Southern Nevada since 1988. We are very proud to be part of the Real Estate Radio Network. Like them, we are dedicated to delivering timely, balanced truths about local market conditions. We not only share our experience and knowledge, but that of our expert contributors. With us in studio now, we have Steve Schauer from New American Fund. Steve, welcome back.
Hi, Harvey. Thanks for having me.
Today, I want to talk about people who are looking to come in with as little down as possible, and that would probably be FHA, right?
That 3.5% down payment is a great option. Less restrictions on the credit scores, can go all the way down to 580 FICO score, and less restrictions on the time since foreclosure or bankruptcy as well.
Right, that's what, 3 years.
So there is something called a back to work program. FHA will allow a 1 year
Right.
if you have some, what we call in the business, extenuating circumstances, loss of income, health issues, things like that.
You'll have to have rebuilt your credit since then, obviously.
Correct.
Although it bounces back very quickly.
It really does. We've seen high 7 FICO scores after short sales, bankruptcies.
Yeah, within months.
There's some grant programs out nowadays. We call them DPAs, or down payment assistance programs. We've moved people in with as little as $1,000, $500 to move into a house right now.
The other question that people ask me, Steve, is if I have to have a lot of money in the bank.
That's called reserves. An FHA loan, there's 0 reserve requirements.
FHA also changed their MIP. That's the mortgage insurance premium.
If you're putting less than 20% down, you're going to have this monthly charge of mortgage insurance. They lowered it to very comparative to a conventional style loan.
But it stays with you now the entire term of the loan, right?
What a lot of people don't know, if you put 10% or more down,
Uh-huh.
you can actually get rid of the mortgage insurance.
On FHA?
On FHA. It's based on an 11-year period.
So you need to carry for 11 years?
Yes.
Okay.
Well, that mortgage insurance still pays off the house when I die, right?
That does not. Good. We get that. We get a lot of people asking that. Correct. Protecting the lender.
Right.
Correct. So there's also the conventional loan that you can purchase up to $417,000 on a loan amount. And everybody thinks that conventional you could put 20% down payment.
Right.
No, you can put as minimal as 5%, and there are even some 3% downs. So conventional has a 7-year waiting period on foreclosure, with an exception. If you've done a bankruptcy and you rolled that property in, you can wait 4 years since the foreclosure.
FHA may be good for now with a plan of refining later to a conventional.
Right.
Or you might just ride that FHA out, and it might be the best plan for you long term.
People afraid of home ownership. If you look at the general public and people that aren't able to save money on their own, where do people have their most money typically? It's in the house.
That's right.
And you have to live somewhere anyway, and you know the property goes up in value, and all of a sudden you're sitting on $50,000 in your home,
Right.
and you made a 3.5% initial investment. Even if the house doesn't go up, you pay down the mortgage.
I always tell everybody that equity is gained 2 ways in a property.
Yes.
1 is the house going up, and 2 is paying down the loan.
'Cause I think that it gets forgotten. You're paying $1,000 a month in a mortgage. A good portion of that is interest.
Yes.
And that interest can be deducted from your income at the end of the year, and you get a tax refund.
You'll deduct the interest and the actual property taxes.
Hey, Steve, thanks so much for coming
My
in
pleasure.
today.
Thank you guys for having me. I appreciate it.
Thanks for listening to Las Vegas Real Estate Now. Please tune in every week and help us heal the Southern Nevada market one home at a time.